Welcome back to the deep dive. Today, we are looking at a world that is essentially trying to rip itself in half.
Yeah, that's definitely one way to put it.
Well, you have this massive innovation engine, right? You have AI completely reshaping national power grids. You've got electric trucks finally hitting a price point that doesn't, require you to take out a second mortgage. So that's pulling us forward at breakneck speed.
Right.
But then you have the anchors, and we are talking gold hitting $5,000 an ounce. You've got a White House openly warring with the Federal Reserve, and these wild legal battles that range from the definition of corporate complicity and massive crimes to, well, the legal definition of a chicken wing.
It really is this crazy split-screen economy right now. I've been spending a lot of time going through the Market Pulse Global Finance and Corporate Strategy Report. And the dissonance in there is, it's just louder than usual.
Yeah.
Usually when you see innovation this high, you see huge market optimism. But right now, we're seeing all this innovation paired with extreme defensive positioning. So everyone is building the future, but they're also kind of digging bunkers at the same time.
That is the perfect way to frame it.
Yeah.
Building the future, but digging bunkers. So our mission for this deep dive is to figure out which signal is actually stronger for you, the listener. Is it the tech optimism or is it the macro fear?
And we really have to get into that policy spat between the White House and the New York Fed later on, because that is exactly the kind of institutional crack that lets the inflation genie out of the bottle for good.
Oh, absolutely. We will definitely get there. But let's start with the builders before we get to the breakers. The AI narrative has completely shifted. For the last 2 years, it was all about the chatbots, ChatGPT, Gemini.
Grok.
Right, Grok. But now the story isn't the software. It's the concrete, the steel, and the silicon required to actually keep these things alive.
Yeah, the massive hardware bill is finally coming due. We are seeing just relentless demand for chips. But what's fascinating is how the scope has widened. NVIDIA is obviously still the kingmaker here. I mean, Meta is buying millions of their GPUs for their data centers.
Millions. It's just the scale is hard to wrap your head around.
Exactly. But what's interesting right now is the spillover to AMD. Funds are forecasting outsized earnings growth there. And that's not just for their AI GPUs, but for the data center CPUs.
The CPUs.
Yeah, the workhorses that actually manage all the traffic in the servers.
Okay, so it's this huge infrastructure build-out phase. But the constraint isn't really silicon anymore, is it? I mean, from the report, it looks like the real bottleneck is electrons.
Oh, 100%. Energy is the new bottleneck.
Because this Microsoft story, this is the one that actually made me sit up, they announced this 100% renewable match, which, sounds like your standard corporate PR boilerplate.
Right, right.
Until you look at the sheer scale of what they're doing. 40 gigawatts of contracted clean power?
Let's put 40 gigawatts in perspective for you. That is roughly the total installed generation capacity of a country like Argentina.
Wow.
Or, think of it this way, a large nuclear reactor puts out about 1 gigawatt.
Yep.
Microsoft has effectively contracted 40 nuclear plants worth of green energy just to offset their AI consumption.
That is completely massive. But here's the strategic pivot that I think is super risky. They aren't just building these power banks in Arizona or Spain. They are planning up to $50 billion in AI and cloud investments specifically targeting the global south.
Well, it's a move dictated entirely by physics and geography. Microsoft has a stated goal to be carbon negative by 2030. If you want to achieve that, you need consistent year-round renewable generation.
Right.
And the global south, so parts of Africa, South America, Southeast Asia, that's where you have the highest solar irradiance and all this untapped wind potential. But you are completely right to flag the geopolitical risk there.
Yeah, because they are effectively exporting their core energy infrastructure to regions that can be, well, politically volatile.
Exactly. They're building the engine of the Western economy in places where they might not actually have total control over the switch. It's a brand new form of geopolitical arbitrage.
So Microsoft gets the green energy, the host nations get the massive infrastructure investment, but it ties the U.S. tech stack to foreign stability in a way we really haven't seen before.
It just highlights that data centers are the new oil refineries. You put them where the raw resource is. And in this case, the resource is sunshine.
Meanwhile, on the consumer side of AI, Elon Musk is keeping the hype cycle spinning as usual. Prediction markets are currently betting heavily on the release of Grok 4.2 this week from xAI.
The version number is classic Musk.
Yeah.
But the speed of the release is the real story there. The iteration cycles for these models are shortening so fast, we aren't talking annual updates anymore. It's practically monthly.
And that just creates this huge fear of missing out among investors, doesn't it? It keeps the capital flowing into the sector even with interest rates staying high.
Oh,
And
definitely.
speaking of capital flowing, or, well, maybe stopping, let's look at the media landscape. We've got Warner Bros. Discovery, WBD, back at the negotiating table. The board is now officially recommending a deal with Netflix ahead of a March 20th vote.
This is basically the end game of the streaming wars. We are in the extreme consolidation phase, and Netflix granting WBD a 7-day waiver to go find a best and final offer from Paramount Skydance. That is a massive power move.
Yeah, it's basically Netflix saying, hey, we know we're the only ones with the balance sheet to actually save you, but go ahead and check the couch cushions anyway.
Precisely.
It really feels like we are rapidly moving toward a world with maybe 3 media companies and 4 banks, but not every company is merging. Some are just, packing up and moving. Palantir has officially moved its headquarters from Denver to Miami.
And this is a textbook example of jurisdictional competition. Palantir clearly wanted a different regulatory or tax environment, but the detail that really stands out in the report is the local reaction in Denver.
Right. The local officials claimed they received absolutely no advance notice. That is that detached corporation trend we've been seeing. You operate in a city, you use its roads, you hire its talent, and then you just vanish overnight without so much as a goodbye letter.
It reinforces this growing idea that these giant firms view themselves as completely distinct from the physical communities they inhabit. They're fluid entities. If the friction in Denver gets too high, whether that's taxes or politics or just culture, they simply port the headquarters to a friendlier server, physically speaking.
And that theme, corporate separation from responsibility, it bleeds pretty heavily into the legal updates we have from the report this week. Now, we have to cover these carefully to remain completely impartial, but the implications are huge. Let's start with Victoria's Secret and their former CEO, Les Wexner.
Right, so this involves a deposition regarding Wexner's relationship with Jeffrey Epstein. And the defense strategy laid out here is quite specific.
Right.
Wexner claimed he was naive about Epstein's activities, he denied any knowledge of the abuse, and instead he pivoted to a financial defense. He is alleging that Epstein actually stole vast sums of money from him over the years.
So the core argument is essentially, I wasn't a co-conspirator, I was actually a victim of embezzlement.
Precisely. The legal strategy attempts to sever the link between the CEO and the crimes of his associate by framing their relationship as one of purely financial exploitation perpetrated by Epstein against Wexner.
Got it. Then we have Meta, Mark Zuckerberg testifying in the teen harm suit regarding Instagram.
This one is fascinating because it's a battle over design versus intent. Zuckerberg defended the platform's mechanics, things like the engagement metrics, the beauty filters, the algorithm itself.
Right.
His argument is that the company is actively removing underage users and that the tools themselves are fundamentally neutral. The plaintiffs, on the other hand, are arguing that the design inherently creates addiction and body dysmorphia.
And that's a really hard case to prove, right? Because you have to show that Meta knew the design was harmful and deliberately kept it anyway.
Exactly. It all hinges on proving internal intent.
And finally, on the legal front, we have Bayer proposing a $7.25 billion settlement to resolve thousands of U.S. Roundup cases.
But notice the catch here. They are putting over $7 billion on the table, but they are strictly maintaining that the product is safe.
So it's not an admission of guilt.
Not at all. This is purely a settlement to end the uncertainty. Corporations will often pay billions just to stop the bleeding on their stock price, even if they absolutely insist the science is on their side.
It's a pretty grim calculus. $7 billion is just cheaper than another decade of bad headlines.
Unfortunately, yes. That's the math.
Well, let's pivot to something where the consumer actually seems to be winning for once. We've been promised affordable electric vehicles for what feels like a decade, and 2026 might actually deliver.
The pipeline is finally looking realistic.
Yeah. Toyota just unveiled the 2026 CHR electric hatchback. The specs are solid. Starts around $38,000. You get about 287 miles of range, dual motor, all-wheel drive, and it uses the NACS fast charging standard.
Which is great, but Ford is targeting an even lower price point. They're planning a midsize electric pickup for around $30,000.
And that Ford announcement is so significant because of how they are actually achieving that price, right? They aren't just squeezing their part suppliers. They're moving to this new universal EV platform with a 48-volt architecture.
Yes.
Okay, let's pause there because 48-volt architecture sounds a lot like marketing speak. Why does that actually lower the physical price of the truck?
It comes down to basic physics. Ohm's law. Power equals voltage times current. If you increase the voltage, tripling it from the standard 12-volt system that cars have used for decades up to 48 volts, you can deliver the exact same amount of power with significantly less current.
Okay. And less current means what, practically?
It means thinner wires. You don't need those heavy, thick copper cables to carry the electricity to your power windows, your steering, or your AC. Copper is really heavy and it's really expensive.
Right.
So by switching to a 48-volt system, Ford can strip a massive amount of weight and copper cost right out of the wiring harness. It makes fewer parts, it improves the aerodynamics, and it vastly simplifies the manufacturing, which means you get more range out of a smaller, cheaper battery.
So by just upgrading the voltage, they save money on raw copper and battery size, and they can pass that savings straight to the sticker price. That is exactly the kind of engineering breakthrough that scales.
It is. It's unsexy engineering that results in a $30,000 truck. That is how you get mass market adoption.
And on the health front, we actually have a similar kind of platform breakthrough. The FDA has reversed course and agreed to review Moderna's mRNA flu vaccine.
This is a huge validation of the mRNA platform. After the COVID years, there was a lingering question of whether mRNA was just a one-trick pony.
Right. Could it do anything else?
Exactly. If Moderna gets this approval and the decision date is set for August 5th, it proves they can rapidly update vaccines for seasonal flu strains.
And the breakdown for that approval is full approval for ages 50 to 64 and accelerated for 65 plus, right?
Correct. And the ultimate goal is to achieve higher efficacy than the traditional egg-based vaccines we've been relying on for 50 years.
Okay, we've covered the heavy tech, the heavy law, the health breakthroughs. I need a brief moment of levity before we get into the really scary macro stuff. We have to talk about the boneless wings verdict.
I strongly suspect this one is going to be in law textbooks for years to come.
Oh, for sure. So a judge dismissed the lawsuit against Buffalo Wild Wings, officially ruling that boneless wings is a common, non-misleading name.
Essentially, the court ruled that we are all smart enough as consumers to know that chickens do not have nuggets for wings.
The reasonable consumer standard in action.
Right. The judge explicitly said it's a description of a cooking style, like chicken fingers. It's not an anatomical promise. If you order lady fingers at a bakery, you don't actually expect digits.
Fair point. And Hershey actually had a very similar win regarding the Reese's peanut butter cup, didn't they?
They did. The grandson of the original inventor tried to claim that the recipe had been changed and degraded. Hershey essentially fought back and said, no, the classic cup is still pure milk chocolate and peanut butter. Just don't look too closely at the limited edition pumpkin spice cookie crunch versions.
Right. The line extensions are where the ingredients get a little creative.
Exactly.
So the classic cup is safe, and boneless wings are legally acceptable lies. Now, let's wipe the smile off our faces and look at the macro picture. Because while we are debating chicken anatomy, the global financial world is flashing bright red.
It really is. We have spot gold reclaiming the $5,000 an ounce level. Barrick gold stock is tracking way higher. But the driver here isn't just abstract market fear. It's what is happening directly between the White House and the Federal Reserve.
This policy spat in the report really caught my eye. You have Kevin Hassett, the White House NEC director, publicly calling a New York Fed paper an embarrassment. And he even urged discipline for the researchers who wrote it. That is not normal behavior.
It's highly abnormal. And we have to read between the lines to see what's really going on here. The current administration favors tariffs as a primary economic tool. The New York Fed researchers likely published data showing that those tariffs are directly increasing costs for everyday consumers.
Meaning they are causing inflation.
Exactly.
So the researchers did the math contradicted the political narrative, and so the White House just attacked the researchers.
Which directly attacks the core independence of the central bank. If the Fed cannot publish objective economic research without the threat of discipline, the market completely loses faith that the Fed can set interest rates objectively.
And the Fed minutes that came out show they are already split, right? Most favor holding rates, some are open to cuts if inflation cools, but a few noted that rate hikes are still totally possible if prices stay high.
And that loss of faith, combined with that internal split, leads us straight to the $5,000 gold price.
Let's connect the dots on that for the listener. How does a spat over a research paper equal record gold prices?
Well, if the White House pressures the Fed to keep interest rates low, despite tariff-induced inflation, then your real rates, which is the interest you earn minus inflation, they turn negative.
Right.
When real rates are negative, you are actively losing purchasing power by holding dollars or bonds. So capital flees to the asset that cannot be printed or politically pressured. gold.
So gold isn't just going up because people like shiny things. The confidence in the dollar's management is going down.
It's a direct vote of no confidence in the coordination between fiscal and monetary policy. And this is all being compounded by geopolitical risks.
Yeah, the report noted the Russia-Ukraine negotiations have basically faltered again.
And we have Iran conducting naval drills amid nuclear discussions. Middle East risks are persisting. Brent and WTI crude oil jumped 3 to 4% just on that news.
It's a perfect storm for commodities.
It really is. When politicians fight with bankers and peace negotiations stall, investors just run for oil and gold.
And it's not even just the U.S. Fed under pressure. The report mentioned rumors swirling around the ECB and Christine Lagarde.
Right, there is succession maneuvering happening. The ECB officially says she remains focused on her mandate. But if Lagarde were to make an early departure, it suggests deep internal conflict at the European Central Bank, too.
So you have the two biggest central banks in the Western world facing intense political or leadership crises at the exact same time.
Which perfectly explains why the safe haven trade is so incredibly crowded right now. Investors look at the tech boom and say, I want exposure to NVIDIA. But then they look at the central banks and say, I also need to own physical gold bars.
It's the ultimate barbell strategy. High-risk innovation on one side, extreme safety on the other, and absolutely nothing in the middle.
Precisely.
Let's try to synthesize all of this for you listening. We started this deep dive with Microsoft investing $50 billion in the global south to power the AI future. And we ended with the White House fighting the Fed over the basic math of tariffs.
And the single thread connecting all of it is instability. Microsoft is taking a massive risk on foreign stability because they have no choice. They desperately need the power. Investors are buying gold at $5,000 an ounce because they see domestic instability in our monetary policy. And companies like Ford are literally using physics, the 48-volt system, to try and engineer their way around inflation and material costs.
It seems like the winners in this environment are going to be the ones who can engineer their way around the friction. Ford engineering around copper costs, Microsoft engineering around the limitations of the U.S. power grid.
And wealthy individuals engineering their way around currency debasement by hoarding gold. But you have to remember, the stakes are getting so much higher. When you have $50 billion sitting in a volatile region or a central bank that is literally afraid to publish math, your margin for error just disappears.
Earlier, we talked about corporate transparency. We saw Palantir ghosting Denver. We saw the legal defenses of naive ignorance from powerful CEOs. In a world where the macro picture is this fragile, where gold is screaming that trust is breaking down, do these corporate giants owe us more than just a clever legal defense?
That is the critical question we have to ask going forward. I mean, if Microsoft is effectively acting as an energy minister for the global south, or if Meta's algorithms are actively shaping the mental health of an entire generation, that private company defense really starts to wear thin.
It does.
We are entering an era where corporate strategy and national security are becoming almost indistinguishable. If these massive companies want the influence and the power of nation-states, we might need to rethink how much transparency we demand and maybe stop treating them like they're just simple sellers of software or ads.
And maybe that is the ultimate takeaway for you to mull over today. The lines are totally blurred. A chicken wing isn't a wing. A tech company is basically a utility. And a central bank research paper is a political weapon. We all have to learn to read this new map.
Watch what they build, not just what they say.
That is a wrap for this deep dive. Thank you so much for sticking with us through the physics of copper wire and the geopolitics of gold. We will catch you next time.
Stay safe out there.